Hey, hello friends, how are you? It is, the 27th of January. I'm Chris with ELLIOTT WAVE Cafe. Welcome to today's video. Let's take a look at the market. And I think things are getting definitely interesting. Bitcoin failed to break down, which probably suggests we're probably going to get some kind of a short squeeze in here. I'm going to walk you through the wave count here. I kind of had to massage it a little bit in here to kind of make sense, but it's definitely interesting. And the S&P made a new all-time high. The ending diagonal that some of us eliticians were suggesting doesn't seem to be panning out, and that's the beauty of counting waves, right? They rarely do pan out. So listen, we had plenty of arguments that it's possible, and it started in here trying to throw itself lower, beginning a new declining leg, and all of a sudden we're turning back up, and this throws cold water. And remember, we were talking, and because I've been doing this a while, if it's an ending, and it also looks like it could be an impulsive move, right? Like a leading diagonal, then we have to put that as a backup count and say, well, if it's not an ending and it looks converging, then it's got to be a leading. Well, if it is a leading, it's telling us what's coming up next, which should be the next leg higher into the S&P 500. That should take 70 to 100. Now, watch this thing make a new high, and who knows what happens with the earnings or with the Fed, and the market makes a new high and turns and collapses lower, and it laughs into all our faces. So I'm just going, I can't guess what's going to happen, right? I can just see what's in front of me. So if this, then that. That's kind of how I judge things. Well, if this, then that did not work out. Well, if this, then this should be the next approach. We are at 7,000. We're trying to see if this is going to begin the new leg. So again, I would not fault anybody from trying to get long on a breakout to brand new all-time highs, although I know it's risky. You got to have risk control. But when you have a wave one and a wave two, you do want to buy above the wave one top. If you, you know, have not bought into this pullback, followed by the move back up higher. And if you go and look at the daily, there was a little bit of a suggestion right here, right, that being rejected from that, how do I get rid of this cursor, being rejected of this, what the heck, how do I do that, okay, arrow, being rejected of this 50-day moving average and having almost a bullish engulfing candle in there, that was the first sign that probably this sell-off, it's not going to work out. So you did have a little bit of confirmation from the price, right? But and then yesterday we talked about this as well. Look, you got a bit of a bullish move, yes, on lower volume, but it was a high close. So you get kind of multiple signals continuing to say, listen, the thought about a sell-off lower, it's failing, it's not working out. So, just know that if you lose the low of this candle in here, then if you lose the low back here, all of this becomes very risky. Sure, you could have some kind of a flat correction, and we all know about those, running flats, expanded flats, what have you, but you don't want to guess those. You want to respect your losses and just take them and then reassess after that happens. Anyhow, this is kind of what I'm looking for in the S&P 500 going up next. Now that this sell-off, has fallen to the wayside. So we'll see what happens. I'm still, and you're looking at this wave one, I'm still, looking at it because, we can basically take this. This could be a wave five. This whole move in here, 1, 2, 3, 4, and 5, could continue to grow because it's going to take a long time until this becomes actually longer than a wave three, right? We're looking at the wave five. So, we'll see. We'll see what's going on in here. Some of you might ask me, hey, Chris, is this okay if this is maybe like an ending diagonal? This way, 1, 2, 3, 4, and 5. I don't think so. I don't think I would like the look of that, and I don't even think it's correct by the way that would work. Three wave move up, maybe an ABC, three wave move up in here. So 1, 2, 3, 4, and 5. Maybe, and I guess if we were to turn back below this wave 2, I would revert to that approach now that I'm kind of thinking about this a bit more, right? So let's see what happens in here. There's a couple of options, but the number one option is, if you're wrong, get out of the way, right? That's the only thing that matters. All of the imagination and all of the wave counting, it serves you only up to the point that you're cutting up your loss. If you're not cutting up your loss, that means you're fighting the market, and we're not looking at this with the right eye. So that's where I'm at with the S&P. Enough about that. 6 minutes in. Let's take a look at Bitcoin. That's definitely interesting, and I've been trying to. Yesterday after we've talked, because if I'm going to go back here really quickly, I'll come back to the wave count. We looked at Bitcoin and said, well, listen, it failed to sell off, and people were getting super bearish, and the whole social media was going crazy about, oh my goodness, it's breaking down, freaking out that we're going to see 75 or $60,000 Bitcoin because this failed, right? And whatever you want to take this. And sure enough, when everybody's eyes it's on something, it's going to move the other way, and it's doing so for the second day in a row. Yesterday we failed to break, or the day before, and then we rallied back up. Today's the second day that they're trying to close Bitcoin at the highs here with whatever 3 hours left on the session, and then once you start to get back above these moving averages, the squeeze could start getting on, and you can find yourself. Okay, so if I notice this type of a price section from a sentiment type of reading, from a pure price section, as price is trying to go but it's failing, it's turning back, then I'm going at the wave count and I'm looking and I'm like, where am I wrong into the ABC? The ABC was this, right? A, B, C, or WXY, if you remember the counts, and that would be wave 1, 2, 3, 4, 5 for a 1 and a 2. And I still have this in the back of my mind. I'm not saying it's wrong, because who knows, right, if this is going to pan out or not. But that's the idea, that you could go up into this 61.8 right there, into 93,200, and I'll show this to you. Even as a, let me delete this, and we'll go, just for the sake of the argument, and I'm jumping a bit in here, but bear with me. So you go 1, 2, 3, 4, 5 into here, and I don't know how low that would be, but this is just a drawing, right? Don't make too much of it. So you go back in here, and I'm just looking at the wave 2, which is the 61.8. So you go with the quick shortcut there, and it gives you 93,200. That's the level that any bear needs to watch, as this maybe moves to the upside in some kind of an ABC. If you get above 93.2 and you go into the 78.6, boy, we're going up. So we're going to be watching this. We're trading 89. That's about $4,000 away. If that happens, if it happens, again, this is not a signal. This is no bullish signal. There's no bearish signal here. Okay, but if anybody wants to be bullish and wants to take this as a low, you're looking at the wave 2, and that came into the 61.8. Okay, so if this is a leading diagonal, mind you, a super weird one, because wave 3 it's supposed to get above wave 1. It's very close. It's crypto. It's this. It's that. It's whatever. Close enough, I would say. Maybe it did even. Yeah, I mean, if I look closely, right, it looks like it went above it a little bit. So, you got a defense there. But if that's 1, 2, 3, 4, and 5, and you're squeezing into a wave 1, you're coming back into the wave 2, 8608, you have a failed breakdown. and now you're looking for a wave 3, that's where we're going. And if this is what's, kind of behind that whole idea, and if you're getting back above this 93.2, right, because we're going to be watching that. So we're going to get this out of there, and we're going to be watching that level, which is, again, was a 93.2. So we're taking this wherever, and we're just taking it up 93, roughly somewhere up into this area. If we're kind of climbing back above this, chances are that we're going to continue to go. So again, there's no rush to this, but I know that my chances are going to be much higher if we're getting back above these levels, because guess what? By the time you're up there, you're also above the moving averages. You also have a defense at the back, so now you can trade upwards. Okay? On the bearish side, if this turns and goes, then you can short it here. This is too early. You got to wait for it to go up there. If it does, we'll see, but that's the idea. You can't short it here. You got to let it get up there, or whatever it's going to go, then turn and break below this one on high volume. Then you have probably a trade lower. Until that happens, there's nothing there. So it's again, it's if then that. It's just as much as possible as logical of an approach to the market steps, using wave count, moving averages, levels, failure, sentiment. I know it's a lot, but you cannot rely simply on the wave count. You could, but I think you're doing yourself a disservice. It's Elliott Wave. It's good, and it's it gives some kind of a roadmap. And look, just from the examples that I've showed here, it shows you a couple of versions and kind of how to act on those. But you also have to read price, failure, things like that. So let's see how this progresses. Again, we have a plan for the S&P. We got a plan for Bitcoin. The other one that kind of got thrown into the mix today was the dollar, which Trump just came on and said, I don't care about a weak dollar. I mean, it's fine. Bring it on, baby. Like almost like he likes it. I don't know, makes cheaper the payments for the debt. I'm not getting into that, but the idea is that, at least from his perspective, I don't know how much that matters, but a weak dollar is welcome. The euro, it's already above 120. So having a weaker dollar with the market that tries to break up higher, with gold and silver holding, and this brings me to the silver chart really quickly. Seems that the risk assets want to catch a bid here. Is this the final trap before we sell off? I mean, there's always that fear, but you can't really function on that. You got to have market confirmation. So really quickly, just kind of going into silver, yesterday, just up here on this channel, we were talking, it's selling off on the daily, and we wanted to see a continuation lower if it is some kind of a top. Well, guess what? Did not happen. Did not happen. The market turned back, and it looks, I swear to you, almost like this back here, which I've talked about yesterday. So look at the market back into 114. Again, it's not that easy to destroy bullish sentiment. And guess what? In silver, yesterday or the day before, or maybe for the past week, or maybe for the past month, I don't know. But from what I've saw in some charts, it was showing that the number of people that are buying the short silver ETFs, it's crazy, right? So everybody wants to short some kind of a blow off top. How do you know if it's a blow off top? Just because price squeezed higher? Well, look, there is no continuation. And even if you guess that, you got to wait for the market to confirm it to you a little bit and see if it continues to sell off. And and it doesn't. And now a bunch of these guys probably are not going to get out. They're going to double up. If it's going to go up above this high, 124, 132, you're going to double up, and that's how you're going to blow up. So I don't know. It's extended silver. It's big. It's long. It's like fuck. It's like, look, it's been going straight up, but it can just go sideways slowly, and just wait and then just turn. So it's a big move. It's a big move. I tell you, you know. But again, you look at the daily in here and it continues to just act pretty well. So we got to let it break above these levels at least for a few days, and have at least a bearish closing week until somebody would jump on the shorts, and even then it would be way too early. Like, I would not even dare short this until it's about the 50-day moving average, and that's at 70. And before it gets there, just so you know kind of how I'm thinking about this stuff, even I mean, this is going to take months for it to get there, and then it's got to do a B wave or something, and then you're short. So it's not even in the books. It's so risky. Anyhow, you know, I'm not saying my methodology is the best one. Whatever, there's many ways to do this. If you're a short-term trader, I'm not going into arguments with anybody about trading methodology. So anyhow, that's kind of all I have for today. Thanks for watching. It is, what is this today? Tuesday. It feels like we've already had a long week. So I got to go do my taxes tomorrow, and there is wow, Champions League, a bunch of games tomorrow at 2 p.m. my time. So that's going to be fun. And then we have Thursday, and then we have a bunch of earnings and news. So the Fed is tomorrow. Crazy stuff happens. We'll see. But thanks for watching. Adios.